Welcome to the Delaware SBDC Lunch and Learn webinar on Employee Retention Tax Credit Support Program with Cover and Rossiter CPAs. In this webinar, we speak with Pete Kennedy and Kim Zarett about the details of the program to help you understand federal eligibility guidelines and how the tax credit can work for your business.
Everybody, and thank you for taking time from your day to be a part of today's webinar on the Employee Retention Tax Credit Program. My name is Tom Thunstrom. I am with the Small Business Development Center at the University of Delaware. Along with us today, we have Peter Kennedy and Kim Zarett from Cover Rossiter. They are CPAs, and they will be talking about the Ertc. Anthony George, who is also with the SBDC at UD, will be talking about the program offering that we have at the SBDC for the Employee Retention Tax Credit Program in partnership with Cover Rossiter. We are going to have both presenters present first, and then we will take questions at the end. If you have any questions during the course of the presentations, feel free to put them in the Q&A, and then we will answer them at the end of the presentation. So it would probably be around 12:45 or so when we get to the Q&A section. Just a reminder that this presentation is being recorded. It will be on the Delaware SBDC website shortly after conclusion, probably within a couple of days, we will get it uploaded. And if you need to go back and look over parts of this, you certainly are welcome to do so. We can also provide you the slide deck for today from either Cover Rossiter or from the SBDC. We can get that to you. If you have any questions, you're welcome to reach out to us about that. So with that, I will turn it over to Peter Kennedy and Kim Zarett at Cover Rossiter for the discussion about the Ertc program.
Okay, thanks, Tom, and thanks to Anthony for setting this up for us. I'm going to share screen now to pull up the slide deck. And hopefully everybody can see that. For those of you who don't know who we are Cover and Rossiter. We're a full-service CPA firm located in Little Falls, which is just north of Wilmington. We've been around since 1939. We're up to about 40 folks now. I'm Pete Kennedy. I'm a director. Mung-Yi Gertz is also a director. She's going to try to join us a little later. And Kim Zarett is a principal here with us. So for the presentation today, I'm going to go through a brief history of the program. And the program does continue to evolve. It's a brief history because it's only about a year old. We'll talk about the programs. It's helpful to think of this as two separate programs, 2020 and 2021. We'll talk about the differences there. We'll talk about how to qualify. We'll talk about what wages count and how to coordinate this with other programs, particularly the PPP. And then hopefully, if you're all still awake, we'll have some questions at the end. Okay. Here we go. Okay, so a brief history of the Ertc itself. Everyone's heard of the PPP, also part of the CARES Act back in March. The Ertc was not a very popular program when it first came out. It was crowded out by the PPP, and you could not do both in the original version of the CARES Act. The only people that really tried to do the Ertc were people who could not do the PPP. So we had some 501c6 organizations who weren't originally qualified to do the PPP if they were too large, things like that. The interest in this program really exploded with the Consolidated Appropriations Act, which did two different things. The first thing it did was it allowed the Ertc and the PPP to coexist. So you now can do both programs. You can take advantage of both programs. And that's a pretty big deal. The other thing is that it created the 2021 version of this for the first and second quarter, more lenient terms for qualifications, and it's a more rewarding program, so you can get a lot more money out of this. So this program kind of got turbocharged back in December, or really right at the end of December with the Consolidated Appropriations Act. The IRS, a little bit belatedly, so in March of 2021, figured out that this was going to be a really popular program and decided that they needed to get some clarification out about a number of points. So they issued notice number 2021-20. I think they waited for that number to come up just to make this as confusing as they could. but it clarifies a lot of the points of the 2020 ERTC. They also came out with a new notice, 2021-23, that came out earlier this month, which clarifies some things on the 2021 ERTC. And then lastly, the American Rescue Plan Act in March. It extends the 2021 ERTC through the third and fourth quarters. It extends the statute of limitations also for IRS audits out to 5 years. And it created a new class of employer. Changes continue to come out with this, and I'm sure we'll get more guidance going forward. So these are really two separate programs, and it kind of helps to think of them that way. They share similar facets, but they have different methods of qualifying. You can see one of these programs is much more rewarding financially than the other, and we'll talk about that in a lot more detail as we go through this. The first bullet point here refers to the magnitude of the benefit. So the 2020 ERTC, you get 50% of the first 10,000 wages per employee, and that's it. So, if somebody makes $50,000, that first $10,000 is the only thing that counts. 2021 ERTC, it's 70% of the first 10,000 per quarter. So you can, do the math in your head. That's a lot more money potentially. How to qualify? There are a couple different ways to qualify for this. So there's a numerical test, which is touched on here. So 50% reduction in gross receipts in a calendar quarter versus the 2019 calendar quarter, the same calendar quarter in 2019. That's for the 2020 ERTC. 2021 ERTC, it's a 20% reduction in gross receipts, and it's still compared to 2019. So you're not comparing 2021 to 2020, you're comparing it back to 2019. Facts and circumstances, whenever you see something that discusses facts and circumstances, that means it's a gray area. So we're going to talk in a lot of detail about what the facts and circumstances are. It basically relates to partial or full disruptions of your business. Once you meet it in 2020, you're qualified until your gross receipts rise above 80% versus 2019. It doesn't make that much of a difference for 2020 because, as you'll see, once you qualify for one quarter in 2020, you're going to get the bulk of your benefit in that first quarter. 2021, you can be grandfathered. So if you get a 20% reduction in the fourth quarter of 2020, that counts as qualifying you for the first quarter of 2021. And then the small versus large threshold, this is pretty significant. I don't know if we have anybody here that's a larger business, but if you're close to 100 FTE, you're going to want to make sure that you can button down that you are qualified as a small business for 2020. Okay, so a couple of examples here, just so you can kind of get an illustration of what we're talking about. So we're just going to run through, have 3 employees. One of them makes $20,000, one of them makes $40,000, one of them makes $60,000. So for the 2020 program, if you qualify for the second quarter, I'm not going to count the first quarter because it gets truncated. You can only count wages after March 12th. So second quarter of 2020, you can see your qualifying wages there, a total of $25,000 and qualifying wages, and your potential credit there is $12,500. 2021, if you qualify for the first quarter there, your credit is 70%, so $17,500 is potentially your credit. The next quarter you qualify for, so in 2020, you've used up the credit for the $40,000 and $60,000 person. You only have $5,000 in qualifying wages, which is the remainder of the $20,000 person. Your potential credit remaining for 2020 is only $2,500. 2021, you don't have that cap, so it resets every quarter, and you get another $17,500 if you do qualify. Fourth quarter, assuming that you qualify in 2020, you don't get anything because you used it all up, but you automatically qualify for first quarter of 2021 because you're grandfathered in. In 2021, it just keeps rolling forward, so you get another $17,500 potentially that you are qualified for. And the illustration there is just to show that the 2021 program is a much more profitable program. I'm not going to spend a lot of time on this slide. As I said, I think most of the folks here are small employers. I don't think we have anybody over 100 FTE, although if you're close to that, you might want to make sure that you button that down again. but this is how they determine the number of employees. The significance here is that if you are a large employer, you can only use wages that you paid to people who did not work. Okay, so if you're over 100 employees in 2020, over 500 employees in 2021, you can only use wages paid to people who did not work. If you're a small employer, you can use everything. So everybody's wages count towards this within the limits, obviously. Okay, so how to qualify for this, the numerical test, it's pretty straightforward. Gross receipts is everything except the PPP. So the PPP doesn't count in this, it doesn't factor in. You're comparing gross receipts on a calendar quarter basis versus the same calendar quarter in 2019. So, and that's for both years. So in 2021, again, you're comparing that to 2019 and not to 2020. So for 2020, you must show a 50% reduction in calendar quarter year over year. And then in subsequent quarters, at least a 20% reduction to continue to qualify. Again, for 2020, as we saw in the illustration, subsequent quarters don't count that much because you're going to use up most of that credit in the first quarter that you qualify. 2021, it's a different story. The reduction must be 20%. So that's that's a much easier burden to meet. And then if there was a 20% reduction in a previous quarter, you're automatically grandfathered into the next quarter. And that's so far first and second quarters. That might change as we mentioned. This is continuing to evolve as we go along. One of the a couple major advantages to being able to qualify numerically. First of all, it's numbers. It's cut and dry. There's no gray area here. There's very little way that anybody can challenge that. Secondly, though, and possibly more importantly, if you qualify numerically for a calendar quarter, you get to use all the wages in that quarter. And we'll talk about the difference there with the facts and circumstances qualification in just a second here. Okay, so this is where we get into the gray area, facts and circumstances. The IRS notice spends a lot of time going through examples. I'm going to just kind of hit the highlights here. And if you do want to qualify under the facts and circumstances of this, you're going to have to really drill down into this and make sure you've got a good fact pattern. But what it talks about is a full or partial suspension of business due to government order. So, and more than nominal. So the reduction in ability to operate of greater than 10%. It must be by government order. So it can't be, just recommendations. It can be any level of government, but that level has to have jurisdiction over your ability to operate. It has to be a formal declaration. So if the governor goes out there and says, hey, we suggest everybody, close your businesses, that's not good enough. It's got to be a formal declaration. If you're an essential business, so the governor has said you're an essential business, that doesn't mean you don't qualify just by itself. You can qualify if there is more than a nominal portion of the business that's impacted. And again, the threshold for that is 10%. So a bit more on the facts and circumstances. And these are straight out of the IRS notice 2021-20. If you have suppliers that are required to suspend their business, that might make your business eligible for this. The governmental order requiring customers to stay home does not count. You can still qualify by gross receipts reduction. So if people are required to stay home, but you can keep your business open, that doesn't count toward the facts and circumstances portion of this. Voluntary closures or suspensions do not count. If you are required to close your workplace, but you're able to work from home, that does not count. So it all has to do with your ability to operate. Capacity restrictions may count. So specifically examples that they used in the Notice 21 or 2021-20. If you have a restaurant that's limited to 30% capacity, and that was certainly the case for much of the of 2020, that would count because that limits your ability to operate. It's also possible that a capacity restriction may not qualify you. So if you have one of the examples used in 2021-20 is a retail establishment where if you're restricted to 30% of the fire code occupancy, but you're still able to operate, people can wait online outside your establishment. That does not count. If you've got multiple locations and aggregated groups, if one is shut down or restricted and others are not, again, it's the 10% more than nominal threshold for the group as a whole. And one of the major advantages to the numerical qualification versus the facts and circumstances qualification is that the only wages that are eligible under the facts and circumstances are during the time period that you're impacted by the government order. So for the numerical test, it's the entire quarter. There are no restrictions. For this, you've got dates that you have to be sensitive of, and who gets paid and when they get paid, and it gets a lot more complicated. So I'm going to throw a slide up on here, and it's a little difficult to read, but this is really just to, as everyone knows, it's been a long and winding road here. The governor's original declaration happened on March 12th. The fourth modification on March 22nd talked about essential versus non-essential. There have been, by my count, 36 modifications to the state of emergency. And the idea here is if you're going to use the facts and circumstances, you got to have a really solid timeline that says when the impact started, why it started, what the actual declaration was, and when it ended. Because again, you can only use the wages paid while the business was impacted due to government order. The other point I wanted to make here is make sure if you're going to use this, that you have a really solid documentation trail. You've got a solid timeline. You've got copies of all the declarations, things like that, because in theory, the IRS could come back 4.5 years from now and say, oh, this wasn't so bad, and then try to take the credit back. So you got to keep in mind that this is subject to IRS audit for 5 years from now. Okay, so really quickly, what wages count and what wages don't. It has to be wages paid during the calendar quarter. Only the first 10,000 paid in a calendar quarter, or only 10,000 paid to an employee during a calendar quarter can potentially count. It must be wages paid after March 12th of 2020. Healthcare plan contributions count. Employee contributions to 401ks count. These wages don't count. So self-employed wages don't count. Wages paid to relatives don't count. Wages taken for the PPP, and we're going to talk about that in some detail in a couple minutes here, or really any other program. So if you've got multiple programs going on, you got to be mindful of the fact that you can only really take payroll once, and you can't keep using it over and over again for different credits. Okay, so PPP and the 2020 ERTC, which is what kind of what we're saying. This applies to 2021 as well. Again, you can't use the same wages twice. So if you've already applied for your PPP forgiveness, you can't go back and amend the PPP forgiveness application. If you have more qualifying payroll than you needed, you can reprogram the excess without refiling the PPP forgiveness application. And I'll go through an example of what that means in just a minute here. If you have other PPP eligible expenses that were not taken, you can't reprogram and act like they were. So just as an example, if you applied for PPP 1 forgiveness as soon as you could, and you thought, I just want to get this over with, I want it off my desk, I've got 24 weeks of payroll, which is plenty. I'm not going to bother with rent or utilities. You put it on your forgiveness application. Here's a bunch of payroll. Way more than I need. You can go back and take excess payroll, but you can't essentially act like you can refile. If you've got another $50,000 of rent and utilities that you could have used for the PPP application, you can't go back and redo that. That's essentially lost for now. So again, one thing that we've seen over the last few months of how this program and other programs operate is many times they set restrictions initially, and then they'll say, oh, that's okay, go ahead and do it anyway. So we've seen that over and over again, and it's very possible that they'll do that with this as well. In a worst case scenario, if your PPP forgiveness gets denied, you can use the PPP, or you can use the payroll expense from the application. Hopefully that's never going to be an issue. Okay, real quick here. This is a little bit busy, and I apologize for that. But so if you've got 200,000 annual salary, 4 people at 50,000, you apply for PPP2. You get a 41,667. You receive the check. When you receive the check, that starts the clock ticking on the forgiveness for PPP. You've got 24 weeks to rack up $41,000, essentially a payroll, to get the PPP forgiveness. You've got way more than that, obviously. You've got 92,000. You qualify for the first quarter of the ERTC. You can take payroll from January 1st to March 31st, only 10,000 or 40,000 apiece. The remainder goes toward the PPP. You qualify for the second quarter, you do the same thing. So the PPP, you've got 10,000 in the first quarter, 10,000 in the second quarter. You got the entirety of July, and you only need 5,000 for August, and you've maxed it out and you're good. You'll get a little constricted if you qualify for the third quarter of the ERTC because you're not going to have enough payroll, basically. So we just kind of threw this example together, and I'm not going to go through it in too much detail, but it just shows how you can interact with these programs. You should have under the PPP, it's only 2.5 months of payroll, basically 10 weeks is what it's based on. You have 24 weeks worth of payroll to forgive to rack up enough for forgiveness. So there's plenty of room there to fit in the ERTC. Okay, so how do we claim this credit? Basically, it gets claimed on your 941. It is a refundable credit on your 941. So when you file your 941, and if it's filled out correctly, you're going to get a check back for the excess tax. Now, this is a bit of a leap of faith. When you're an accountant, it's beaten into you from a very young age. You don't mess around with payroll taxes. So, but what they have said is that the penalties are suspended, and if you're sure you're going to qualify for this credit, you can stop remitting your payroll tax. Now that is a bit of a leap of faith for most of us here, especially accountants, because we're used to, if you short your payroll tax, you're going to get beaten into submission with penalties and interest and things like that. If you go back, and so for 2020 941s, if you are now eligible where you weren't eligible before because you did the PPP, you can file 941X and take the credit if you are eligible, again, back to 2020. You can receive an advance on the tax prior to filing the 941, only going forward. So if you haven't filed a 941 yet for a quarter that you're going to be eligible for, you've already paid some taxes in, you want to get them back, or you want to get the credit, you can file a Form 7200 and make that happen. Again, the IRS can go back 5 years on this, and you are probably going to be, there's very little, obviously, precedent or anything having to do with this. We don't know what they're going to look for, but they can go back 5 years, 5 years from now, and take a look at your records and make sure you qualify for this. Okay, so just some odds and ends from IRS notices 2021-20 and 2021-23. Trade or business includes all 501c3 nonprofits, does not include government agencies. Self-employed individuals are not eligible with respect to their own wages, but if they have other people on the payroll, they can use it for that. Household employees not eligible. If you have members of a controlled group, either multiple locations, multiple companies, you have to aggregate it as a single employer. And that's for the purposes both of headcount And if you have one person working in multiple, under multiple EINs, things like that, you have to aggregate that. So you can't take $10,000 per quarter for this one and 10,000 for that one. It's got to be, it's got to be one person. Certified professional employer organization. So credits belong to the business, and these are where you aggregate certain professions for benefit purposes and things like that. The payroll checks come from a separate organization, but the credit belongs to the business and not to the CPEO. Large businesses, you cannot count accrued sick, holiday vacation as qualifying wages. For any business, you can't count severance or other post-employment pay for qualifying wages. If you have a health plan where you don't specifically allocate the costs to individuals, you can use any reasonable method. So if you know what the COBRA would be for someone if they left, you can use that to allocate those costs. And again, family leave, the Coronavirus Act, any other program where you use wages to qualify, you can't use the wages twice is the bottom line there. All right, so one big difference between this program and the PPP, and it's a reason that the PPP is a much more favorable program. The PPP is not taxable, so you've got to check. You don't have to reduce your expenses. You don't have to declare it as taxable income. This credit, though, the ERTC does reduce your expenses. So it reduces your expenses dollar for dollar. Essentially, it makes it taxable income because it reduces your deductible expenses. PPP forgiveness, again, you can go back to 2020 and optimize. You can't refile, you can, but you can reallocate to try to get the most money you can from the 2020 ERTC. And then lastly, of course, there will be more changes and modifications to the guidance. The trend has been with all of these programs to make them more lenient and more favorable. So they come out initially with restrictions. Initially, the PPP was supposed to reduce your taxable deductible expenses. Then they backed off on that. Initially, PPP and ERTC could not coexist. Then they backed off on that. So the trend has been to make these more favorable rather than less. More to follow on these programs. Stay safe, be well. That's about all I have. I went through that pretty quickly. I know it's a at its heart, it's not a very complicated program. The complications are in the gray area of how to qualify for government impact of government orders on your business. But the numerical aspects to this are not that difficult. Again, it wouldn't surprise me if there are people on this seminar right now who don't know a lot about this, because for the first 9 months of its existence, nobody knew a lot about it because it just wasn't a very popular program. But again, that exploded about 4 months ago, and here we are today. It can be a very profitable program if you can qualify and if you can take advantage of it. And I would highly recommend exploring that. So that is all I have.
Thank you, Pete. That was a good presentation.
Thank you.
We'll do a Q&A after our portion of the presentation. So, we've got a couple questions in the queue. If anybody has other questions, they're welcome to certainly submit them, and then we'll knock them all out after we have our part of the presentation at the SBDC. Before I turn it over to Anthony, I do want to give credit to Gabe Latinsky. She's the organizer and the champion of this session. She's the one who's glued us all together to make this work and taught us how to run presentation and panelist-based Zoom sessions, or at least taught me to do it on the fly yesterday afternoon. So thank you, Gabe, for your help in putting that together. With that, I'm going to turn things over to Anthony George. Anthony is an advisor here at the SBDC. He's going to talk about a program that the SBDC is offering through CARES Act as part of the ERTC. in partnership with Cover Rossiter. Go ahead, Anthony.
Thank you, Tom. Let me just bring this presentation up. As Tom mentioned, my name is Anthony George. I'm with the Delaware SBDC. First, in my presentation, I'm going to introduce some services and just some background on the SBDC. Then I'm going to talk more specifically about the CARES Act funded program that we are offering through a competitive application process to assist companies in navigating the ERTC. Now, for those of you that do not know, the SBDC was founded about 35 years ago. We have 3 locations, Newcastle, Kent, and Sussex. We are funded by the SBA and the state of Delaware, and we're hosted by the University of Delaware. All of our services offered by the SBDC are free and confidential, and we help companies of all shapes and sizes and types. Some of the services that we offer is pretty extensive. This particular slide goes into the many different services, some of which you might have taken advantage of in the past or want to learn more about. It could be business planning, performance analysis, capital access, market research and analysis, information around business resilience, continuity. We have assistance navigating government contracting, budgeting and financial planning, R&D and commercialization, grant support, and other resources. We have a cybersecurity program. We also assist when it comes to digital marketing and e-commerce. Some specific programs, the most important is a top program that we're talking about today, which is a CARES Act program. That program is funding the ERTC support program, as well as assisting companies with navigating the effects of COVID-19 and the various disaster resources that are available, such as the PPP and many other programs that we've been supporting since March of last year, as well as helping companies pivot their business. We also offer many additional recurring services, such as the How to Start a Business workshop. We have specific programs around financial analysis and loan packaging, R&D and commercialization. That would be our SBIR resource program. Data Assured, which covers things like e-commerce and cybersecurity. We have a family business program, which does recurring events around particular topics, such as family business or related topics. The next one is coming up in May 19th with the Delaware Business Times. We also offer many different programs through our student link, linking students to businesses, students from the University of Delaware, which is where we are hosted to help businesses. And also, as we mentioned, we have a specific program through PTAC that assists with navigating government contracting. Now, I'm going to now dive into the ERTC program. We are launching a competitive program where, post a formal application process, 25 businesses can become eligible to receive customized ERTC filing services through Cover and Rossiter. We are covering 80% of the total cost of preparing the filing, and we are requesting a applicant contribution that's based on the number of employees that's going to be submitted under the ERTC, and for a low of 1,200 to a high of 1,800, because we are targeting companies between 10 and 50 employees for this particular program. The amount is a fixed amount, the company contribution. It doesn't matter if you're filing for 2020, 2021, or both. We don't, in contrast to other programs in the marketplace that are looking for a percentage of the credit, we don't have a contingent fee. So ours is a purely fixed price program where we cover 80%, and we're requesting the business to cover the remaining 20% based on the number of employees. Now, to dive into eligibility for our program, you might be eligible for the ERTC, but possibly not for our program, depending on the circumstances. As I mentioned before, we're looking for companies between 10 and 50 employees. The $1 million question is, if you're a nonprofit, would you be eligible? The answer is yes, we would encourage you to apply. However, the emphasis is going to be on for-profit companies for this program. However, as I mentioned before, you are encouraged to apply, and we will evaluate the application. Similarly, if you're out of the state of Delaware, we would be open to receiving an application, but we are emphasizing companies in Delaware. For the purpose of the ERTC, we are looking for companies with full year operations in 2019 for our program, which is very critical for the comparisons for 2020 and 2021 look at 2019. So it's critical to have a full year of operations. Prior to starting the application, we would encourage you to have an estimate of 2019 payroll and healthcare expenses available. Doesn't have to be perfectly precise, but we are going to ask you as part of the application to give us an estimate of your full year healthcare and payroll expenses. The application process is online, and it does have step-by-step outlining of eligibility and ask some detailed questions. I would encourage you to review each question carefully as you go through the application. On this slide, I am showing the actual first page of the application. You can navigate to it through our website. You could go right to the main DelawareSBDC.org page. You'll see an actual banner on the page, or you can go to this link directly that will take you to the actual application link. But it's easier to navigate directly to our main page and then just click through where it says ERTC, and it'll take you right to the application, and you can start filling that out. And like I said, the application process is online. Some other considerations for this program: selected applicants will be required and also will receive a business continuity and disaster plan from a vendor of the SBDC. This plan will be supplied by us, and it's up to $1,000 value to have this plan developed by our vendor for you as in conjunction with your acceptance in this program. As I mentioned before, the application process is currently open. We are accepting applications right now. And we are targeting a deadline of Monday, May 17th at 10 a.m. So I would encourage you to get the application in as soon as you can, to make sure that you meet the deadline for the program. And as I mentioned, we are looking for around 25 businesses. So it is limited in terms of availability. Also, we are, and as I mentioned in my last bullet point, to stay tuned for a second grant program. We are currently developing a second program that is going to assist companies with improving their digital presence online in the forms of social media, digital marketing, etc. So we are developing another program. So if you find yourself ineligible for this program, we would encourage you to stay tuned, keep an eye out on our website and also on our newsletter, which you can sign up on our website to get some updates regarding a new program that we are rolling out over the next month to also bring in some experts to assist companies in this particular area. So I would encourage you to stay tuned for that as well. So I want to thank you again for joining this presentation today, and thank Cover and Rossiter as well. And I wanted to share my contact information. Feel free to reach out to me if you have any questions regarding eligibility or how to apply, how to navigate the website, questions around the ERTC or anything else that we could assist with. Feel free to reach out to me, and I would encourage you to apply as soon as you can. So I'm going to turn things over to Tom, who's going to send out a brief survey, and then also we'll turn things over to the question and answer. Thank you.
All right, thank you, Anthony. There are a couple of poll questions that are available if you hit the poll button down at the bottom of your Zoom session. If you're in a capability of doing that, feel free to answer those. There's two very easy questions. Just gauges our effectiveness for today so that we have something that we can look back upon after today's session. We do have a few questions. One of them is just regarding whether or not we will put this video up on the site. Yes, we will. Give us a couple of days. It will be live on our website, DelawareSBDC.org. You should be able to click into the ERTC program link. It's on the top of our website, and the video will probably be posted there. Give us a couple of days on that. One question regarding us at the SBDC: do we assist nonprofits or only for-profit businesses? As Anthony alluded to, we are encouraging nonprofits to also apply for the ERTC program that we are offering. We are giving priority to businesses for this program. In our general consulting services, we predominantly work with businesses, given the Small Business Administration often does not do funding directly for nonprofit organizations. There are a number of different sources and resources that are out there, and our advisors can connect you to those as they come up. But as far as the ERTC program is concerned, you are welcome to apply for that, and we certainly would encourage you to do so. So I do have 3 questions to throw over to Peter and to Kim. I'm going to start with the first one. Helen asked if gross receipts in your returns would include any lines of credit draws. And I'm going to add to this as well, because some restaurants also had to take advantage of the help loan from the state. So would it include any other like state-based programs to your knowledge?
As far as I'm aware, it would not include a line of credit draw. The other, we'd have to take a look at what the other sources of revenue would be. Generally, it's going to obviously be top line revenue, sales. I know for nonprofits, it basically includes everything. So if you have sold investments and things like that, that counts toward this program. But if there are specific questions, if they want to reach out to us, we could do some research on it.
Okay, next question. Being a small essential business, our gross receipts were not reduced due to the pandemic. Does this mean that we may not be eligible?
If your operations were not impacted by a government order and your gross receipts did not get reduced, in all likelihood, you're not going to qualify for this.
Okay. And last question that I have in the Q&A, is the ERTC dependent on having bad payroll expenses or having had payroll expenses in 2019? The business in question had a poor year and they did not take out salary, but the corporate gross income change from 2019 should still qualify them according to this individual.
Yeah, I think 2019 payroll, I don't think is going to come into play here too much. So it's really your 2019 gross receipts compared to the 2020 or 2021 and the same calendar quarter. And then it's based on payroll in those years. So your 2019 payroll, I mean, one of the caveats there is, I think when one of the factors they look at for the facts and circumstances is the payroll. So it might, that might be an issue. But if you qualify numerically on a gross receipts basis, comparing the calendar quarter 2021 or 2020 back to 2019, then you should be in pretty good shape. I don't think the 2019 payroll is a direct factor in this.
Okay. Another question, which is the best way to apply without reducing the 941 payment and potentially running into a risk of payroll issues?
So, once you've done all the work and make sure that you qualify and you've got a calculation for what you believe the credit is, that goes straight on the 941. So if you don't feel comfortable, shorting the remittances, you don't have to short the remittances. You can just keep making your payroll tax payments and then claim the credit on the 941. And what does work is, and we've seen it work, is they'll cut a check right back to you. If you're the credit itself goes on the 941, you don't have to stop paying payroll taxes to do that.
Okay. If you have any other questions, attendees, you're welcome to submit them. This was a follow-up on the 29th on the taking out salary question. If somebody is the owner of an S Corp, can they not pay themselves? They can only pay others, or are they allowed to take a salary?
I'm looking at Kim for that one. I'm not sure.
So the AICPA is still trying to get further clarification on this issue when they talk about wages for related persons. We think that owners and spouses may be okay, but other family members may not. So it's not definitively answered at this point, but we are certainly hoping for guidance in the near future.
I don't know if you can hear that. I'm knocking on wood for everybody. There is guidance coming out. All right. Well, Peter, Kimberly, thank you. And we appreciate your time and participation in today's webinar with us and for your partnership with us. Anthony, thank you for your help in leading this effort for the SBDC. And thank you everybody who attended. If there are any, we do have one other question that did pop in. I guess the easiest way to learn about the update would be through how, Pete, in regards to Kim, about the how the salary issue would be rolled out. What would be the easiest way for any business to find out?
I suppose we can try to stay in touch with you as we get further guidance and try to get in contact directly with the person that has that issue. It looks like there's another question that's popped up too about amending returns, 941 returns to claim the credit for 2020. Yes, we do file amended returns. Amended returns are filed in paper. There's not the ability to electronically file the Form 941. So just urging a little bit of patience with this process too. We don't know how long it will take the IRS to process these, as I suspect they will get several.
All right. All right, everybody. Thank you for your time today. Peter, Kimberly, Anthony, Gabe, thank you for being a part of this for both the SBDC and for Rossiter. Everybody have a great day. If there are any further questions, you can certainly reach out to us at the SBDC or to Rossiter and be able to get them answered. Thank you.
Thank you for watching. The Delaware SBDC provides one-on-one free and confidential business advising. Contact us and schedule a meeting today.